please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so the Nifty is now inching closer and closer to its all-time highs. 11,069 or 70 is where the Nifty is at. I mean, you know, we're just quibbling about 15, 20 points here and there. Otherwise, this market is virtually at a new high. And right now, the participation is coming in from private sector banks. So Kotak Mahindra Bank and HDFC Bank once again hitting new highs at the high point of trade. The charts will be up for you. How do you position yourself then? Yeah.
No, I just wanted to tell our producers that we should have fireworks because the Sensex is created a new high today as well, and we didn't have the drum beats. It's 36,735. It's 0.5% higher. It's higher than yesterday's high, and therefore the highest level.
Can you hear the drum beats?
Okay, there are
now?
the drum beats. Okay.
Okay, celebrations continue. Pramod Gubbi joins in. He's the head of equities of Ambit Capital. Pramod, hi. You know, a lot of people have been very circumspect on this market, but what this market has done is climbed every single wall of worry. Do you expect that to continue, and do you expect new highs for this market now?
Yeah, I mean, I think if you look at the market rally, I mean, it has been a lot more narrower this time around than what we saw over the last 2-3 years. So to that extent, it is reminiscent of what makes the economy tick, because there are specific sectors which are doing better than the others, and within that there are specific companies which are doing better than the others. And pretty much those are the ones which are pushing the market up. So I mean, in other words, I think this continues to be a bottom-up market, and if one views the market like that, there continues to be opportunities to make money in this market as well.
Okay. Good morning, Pramod. We welcomed you with drum beats. The markets are still, I mean, the indices are still scaling all-time highs. But actually, the mid-cap pain would still not allow a lot of investors to enjoy this. Is the mid-cap pain over, or are there still large pockets of outlandish valuations?
I wouldn't say outlandish anymore, but yes, not necessarily attractive. So whether that means that they need to correct more or not. One thing is clear, I think the technical factors that drove the mid-cap correction, or rather the sell-off, no longer are in the same force as they were in. To that extent, it becomes more of selective movements based on underlying fundamentals, which will pan out over the next 2-3 quarters through this earnings season as well as the next. So the movements, I think, will become more stock-specific, sector-specific, as opposed to a broad-based movement, as exactly what we witnessed even at the Sensex level. It's not like we've seen all the Sensex stocks moving in one direction. In fact, majority have continued to remain subdued. It's the handful of minority but larger ones which have carried the index through, and that I guess will be the way forward for the market, at least for the next 12 months until next election, where specific stocks will allow you to make money than the market as a whole.
But sectorally, Pramod, this year, at least the first 6 months of the year have belonged to the IT sector. Stellar moves coming in there. For the rest of the year, do you think IT will take the lead, or are there any other sectors that you're bullish on?
I think it's the same few sectors which seem to have a field day, both in terms of the demand scenario as well as the competitive scenario. We're talking about IT, we're talking about private sector financials, we're talking about consumer. And I don't see any reason why that should change over the next 12 months. Yes, I mean, IT had a tailwind in terms of very attractive valuations over the last 18-24 months, which no longer is the case. But I think in terms of the demand situation, it is only getting better, as we've seen with interest rate increases in the US, consumer spending healthy. You'd seen BFSI, which has been a big customer base for IT, that will continue to do well. And alongside that, if you have a nice little tailwind in the form of rupee depreciating, you know, I wouldn't be surprised if IT continues to deliver healthy returns. Same with the other two sectors of private sector banks and consumer as well. Both the macro and the micro stack up really well for these three sectors.
Private sector financials is spot on, Pramod, at this point in time. Look at the Nifty, Kotak Mahindra Bank, Bajaj Finance, Bajaj Finserv and HDFC Bank are at 52-week highs. Could also be all-time highs for these stocks. So clearly, private financiers in a great spot. L&T is again moving up. It has some tailwind of capital goods. But Wipro is the one that's the highest, actually, 3.3% on TCS's tailwind. Pramod, finally, I wanted to ask you, what's, from your perch in Singapore, for instance, what is this that is driving global markets? It is that, of course, is lifting our boats also to some extent. Is that risk on intact, and is it now also spreading to emerging markets? For the past 6-8 weeks, we were hearing of emerging market outflows. Last week, we didn't hear so much. So two questions really. Is the global risk on likely to move unimpeded, and are now emerging markets better placed?
No, I don't think it is a risk-on situation. In fact, what we're witnessing in India is the case elsewhere as well. Even in the developed markets, particularly the US, the rally is perhaps even more narrower than what we're seeing in India. There are a handful of tech stocks which are pushing up the index. It's not really a broad-based risk-on situation whatsoever, if at all. There are many more worries at the anvil. As far as EM flows are concerned, I think the last print was perhaps the highest outflow from a year-to-date perspective in terms of weekly outflows. We'll wait for the next print. I don't think you should expect any major difference or major divergence in that trend, because all the risk factors continue to hold. Like I said, 3 big emerging markets in China, Korea, Taiwan are all right in the middle of the tariff war that we're seeing. These are large export-driven economies. The others have very open capital accounts in the form of debt markets, which are exposed to the Fed tightening that we're witnessing, which doesn't seem to reverse at all. So all the risks that apply to emerging markets only continue. So this positive momentum that we're seeing is more, again, stock-specific, sector-specific, bottom-up, which is what one should do going forward as well.
Okay, all right, Pramod, we'll leave it at that. Thanks for joining us and speaking about the markets and individual stocks. By the way, Karnataka Bank is under quite a bit of pressure at the moment. From the conference call, the management says that the net interest margins have fallen quarter on quarter to 3% versus 3.54% last quarter. And if you look at the slippages as well, slippages of course are lower quarter on quarter at
hugely lower quarter on quarter. For the last quarter was terrible because it was the first quarter after that February 12th circular.
Yes.
But it's a quarter of that, 1,037 crore last quarter and 270 crore. Why is the stock under so much pressure? Credit cost has fallen. Yes, the net interest margins are down substantially. Maybe that's what's irking. But I mean, slippages should actually warm the market's heart. But let's wait and see. At the moment, it's taking it rather badly. The Karnataka Bank stock. We will have Abhishek come and tell us the key takeaways from the Karnataka Bank conference call. For the moment, we will take a break. We are coming back and we will... Okay, all right. We will not be able to take that break because we have an expert joining us. For the moment, just let me refresh what's happening in the markets. The early morning blues have kind of receded a bit, and we are seeing Sensex and Nifty rise now by about 0.4 and the Nifty as well. The Nifty Bank is marginally in the green, and it's only the midcap index which is showing deep pain, giving the advanced declines a red hue, decliners more than advancers. Let's do one thing. We're inviting the first corporate guest of the morning. Talwalkar's Lifestyles, Anand Gawande will be joining us. But before that, Sonal is here to give us a brief on what the brokerages are saying by way of their buys and sells this morning. Sonal.
Good morning, Lata. A lot of brokerages have written on a lot of stocks. I'll start with Idea. Credit Suisse has written on Idea and they maintain their underperformed rating. They say that the new balance sheet of the merged company will be highly leveraged, and also they expect the new management to focus more on cost cutting rather than market share retention. And in the long run, interest payments on high debt could eat up a large part of the EBITDA of the company, and that's why they're not very bullish on the company. Macquarie has written on Z Entertainment. They maintain their outperformed rating. However, they have cut the target price to 615 from from 675 rupees. They think that the Z5, the OTT app that the company has launched, is very aggressive and will lead to higher operating costs. And they've also lowered the FY20 target multiple to 31 times from 34 times. Oil and gas stocks will also be in focus. We spoke about the consumption growth rate that slowed to 9-month low last month. However, it has improved this month to 9% despite a 20% hike in the retail fuel margins. Also, the gasoline and diesel, those two fuels also showed up quite a good amount of growth. Morgan Stanley has written on HCL Tech buyback. They say that buyback will largely be neutral to FY19 EPS. However, it is in line with the company's normal trend of returning 50% of net income to the shareholders. Credit Suisse has written on SAN. They maintain their outperform and a target price of 875 rupees. They think that company remains an attractive stock in the mid-cap IT space. Back to you.
All right, Sonal, thanks a lot for that. Well, let's do one thing. Let's talk about Talwalkar's Lifestyle. It is the recently demerged arm of Talwalkar's, which houses the gym business. Remember, it reported its quarterly and FY18 earnings for the first time, and the street seems to like it. 8% higher now on Talwalkar's Lifestyle. Anand Gawande, the promoter of Talwalkar's Lifestyle, joins us now to talk about that. Anand, good morning, and thank you for joining us. First, before I ask you about the business itself, tell me, when will this name change happen?
It happened yesterday.
Okay.
That's, yeah.
So, just for... This is yesterday's presentation which we loaded on the BSE NSE website.
Okay.
And hopefully if you can see.
So now it's called Talwalkar's
Gym Limited.
Okay. That is the company we are discussing
I made a promise, so I kept the promise. In 8 days we got the results.
Okay.
And we got the name change both done.
So what we are now discussing is Talwalkar Gyms Limited.
But there is a technicality of the ROC permission and the shareholders permission which may take 30, 40 days, whatever, 50 days. But that's why we have put in the presentation at least several times that the company's name is very easy to understand. Talwalkar Gym Limited. It is the biggest gym company in India.
Okay. So now all the issues that your shareholders, investors have all been clarified?
Completely. So what we have done is we again put here that this company's only focus and primary focus is gymming, online, offline, whatever you call it. The other company, which is presently called Talwalkar's Better Value Fitness, is in the business of lifestyle, excluding gymming. Okay. So we thought we could change the name of this company to something else, but we said let's be very focused. If the idea was to create Lata Focus, the idea was to make a cash flow positive, to reduce debt equity ratio and be ROE, ROC accretive, then let's keep it that way and make it Talwalkar's Gyms Limited.
All right. So now let's come to the numbers that you have announced. The numbers, of course, revenue up almost 10%, 9% higher. Can you give us some more color on how many members you could increase in the first quarter? And more importantly, if you can give it as of date, because I think normally people rush to gyms during the monsoon.
Okay, so I will start backward. In the next 1 week to 10 days, we are launching, according to be the most significantly unique August scheme in India.
Okay.
I can't give you more. I don't want to give you more details because I think there'll be fun in knowing the details. The scheme's focus is not just to make a revenue, but to make people genuinely healthier. So when you see the scheme, it will be obviously advertised on all the channels. That's what is happening. The August scheme is a primary scheme, one of the big money feeders for us, and opens in about 15 days to 20 days. Going back now, March was a good quarter. We crossed the 250 gym mark in March. If you remember, about a couple of, or 1 year back, we were at 200. We are now at 250. So Talwalkar is now the biggest brand in terms of gym in India. Power World Gym is now the second biggest brand.
Okay.
So two brands now straddle each other and both have been doing well. The count of members has been going up. What we are also happy about is post the GST demonetization, all of which is a past issue now. I think we are on the path of growth where we see ourselves using our existing cash flow, Lata and Sonia, to grow 30, 35, 32, 28, 38 gyms a year, but keep cash flow positive, hence make it ROC accretive. So the ROC in this company is now about 17 or 17.2. In the merged entity, it was about 13.5, 14. So there's an immediate expansion of ROC and hopefully will happen as we go ahead.
So how many members did you add in the quarter gone by?
So if you take the quarter which went, because we are discussing the March results which we have come out with just now, for the full year, okay, with about 35, 40 gyms which we added, we are now crossing the 2.1 lakh members mark. Okay. This is only pure gymming, Sonia and Lata. Valued members are different.
So FY18, 2.1 lakh members purely for the gym business.
That is
What's the target
Compares
for
with how much?
I would say about 1.77 or 1.8 lakh last year. But in that there's a gym addition too.
Sure.
And what's the target for FY19?
See, we think that we should be able to open another 30-35 gyms in the current year with our existing cash flow and the way it is. Okay. I think we should close at 2.5 lakh member if we are on target. We would like to keep a good steady growth rate. But as you can see, the most important ratio, debt equity is down, cash flow has improved, okay, and margins are steady.
Okay. What about the margins? Will you be able to keep it at these levels? Very
Actually, the core
levels?
margin, what we did, Lata, and whenever you get time, both of you, we have yesterday downloaded a huge presentation on margins of each gym kind.
Okay.
Okay. So just to explain to you,
these are overall, right?
These are overall, including the franchise revenue, okay, and other revenues which are pertinent to it.
Okay.
Yeah.
So you said that 2.1 lakhs is what you closed in FY18 and 2.5 lakhs is what you plan to do in FY19. So that's a 20% growth that you're expecting?
Because there will be number of gyms also increasing.
Okay.
Yeah.
Okay. And expansions abroad?
We are going steadily but slowly on it. I think we are analyzing some markets like Vietnam, Sri Lanka, Bangladesh.
Okay.
Once we have analyzed those and we are in position to answer something on it, we will definitely take the plunge. But right now we think India is growing and exploding too. Rents are at beautiful levels. So in our presentation again we have put a part where we actually given gyms where 38 to 42% of the rents have gone down. Okay. So why not just take advantage of that?
Okay. So in Sri Lanka, you added 4 gyms, I think, in the market.
4 we added, and 17 or 16 more we soft launched. So we have 40 gyms now in Colombo.
Okay.
So you can go anywhere in Colombo, throw a stone, and there will be a Power World gym.
Okay, all right. Okay, Anant, this looks like a great set of numbers, and we will look forward to...
And we are feeling very healthy now after all this gym talk. So you know what we're going to do over the weekend.
Absolutely.
Hit the gym.
Oh, well, I hope so. Thank you very much, Anant, for joining us with your numbers. Okay, the stock, of course, is very excited, and it'll come up again for you. I think 8% higher on Talwalkar stock, 8.5% higher. The markets actually at the index level have done well, but the breadth of the market is simply not improving. So it's time we invited our experts yet again and asked them what to do. We will have Ashwini, Mitesh and Sandeep with us. Let me start with you, Mitesh. What do you do? I mean, are you convinced that this index is good to go for long positions, or is this exactly the point where you will take short positions for the day?
No, Lata, one, I'm not shorting. You know, we have taken some profits on the long position given the fact that we are very close to 11,070 level, which I'd advocated a couple of days back. And the structure hasn't yet turned weak. So while the PSU banking lot remains an underperforming lot, a lot which is where a lot of weakness is still there on the charts. But that apart, I think the rest of the market is showing some signs of promise, and I'm still trading with more of long bias. So we have taken stray sundry 1 or 2 short positions on Biocon or possibly an REC which is broken down today. So more of long, mild shorting positions are there given the fact that some stocks are clearly breaking down.
Okay, and Sandeep Wagle is also with us, so we'll talk about individual stocks as well. Sandeep, what are you looking at today?
Sonia, I would go with a sell in a Apollo Hospital, stop loss of 990, target of 960, and a buy in a Marico, stop loss 352, target 378.
Okay. Sorry, Mitesh, the Nifty Bank, is there anything specific that you would do different from the Nifty?
Not yet. I think, I would still be positive and just trail my stop loss on the long position to about 26,940 zones and hold them. If that breaks, then maybe, consider some kind of shorting. But for the timing, it looks like it's a okay market. It's rallied a bit, so it's just kind of, being sideways. But individual stocks, I think coming to that, I have a sell on REC. In fact, amongst the, financial institutions, I think REC and some of the PSU banking lots are looking weak. So REC is a sell with a stop at 100 for targets of 93. And Marico is also on my list that's a buy with a stop at 352 for targets of 380.
Okay, new highs for Marico. Just wanted your thoughts quickly on 3 of these large cap names that are surging ahead now. Reliance Industries, Infosys and Bajaj Finance. For the rest of the day, Mitesh, anything that you would trade here?
See, Bajaj Finance has a call today morning. Infosys, I'm not very sure. I think the pattern isn't very clear to me. But Reliance, I think, I've been saying that this leg of the up move will be led by Reliance, and I think that's clearly happening. I think you will see much higher levels. And while it's gone up about, for the week only, it's gone up by about 12-13%. I think on a cool off still remains a buy. I think I would put a target of around 1250 now if you give it about 6 to 8 to 9 weeks of time from here.
Okay. We are also joined by Ashwini Gujral now. Ashwini, good morning again. You know, your boundaries have not been crossed. 11,060, it's still getting beaten down over there. What's the position now on the Nifty then?
There is no follow through.
Yeah.
If you see PSU banks, Canara is down 3%, BOB 2.5%. So basically those three banks are trying to pull up the market. So I don't think this is sustainable. Nifty is at a 15-16 point discount. The moment these, four large caps give up, I think the market should come off fairly strongly. Market breadth is extremely negative. So I don't think we are going to cross substantially the previous high, and that is the call that you put a 50-point stop on the Nifty, 100-point on the Bank Nifty, and we are at such key levels. If there is no follow through, just the long positions can take this market lower, and we are not responding to global cues, crude cues, inflation cues. That gives you the idea that at least today it's not possible. On Reliance, etc., you are seeing some follow through, but I would take it off even out there, because 2 or 3 stocks often don't manage to take the market higher. Having said that, I think PSU banks is a clear sell trade. Bank of Baroda is a sell with a stop of 119, target of 112. Canara Bank is a sell with a stop of 241, target of 227. And State Bank is a sell with a stop of 264, target of 250.
Okay, gentlemen, thanks a lot. So sell on PSU banks coming in, and Ashwini is saying take your profits in the market as well. But for now, the markets are looking pretty good. Reliance is just surging away. It's above that 1100 mark now, and it has Bajaj Finance, etc. for company. But the stock that will be on everyone's radar later in the evening is Infosys. Ahead of its numbers, the stock is actually doing quite well. It's up about 1.5%, and volumes are piling up. Rima is here to tell us what to expect this quarter around. Rima.
Hi, thanks so much for that. First, a quick run through of the key numbers. Dollar revenue growth seen higher by 1.5% quarter on quarter. In constant currency, it's expected to be a growth of 2.5 to 2.7%. So better than what the company delivered last quarter, but lower than what TCS delivered this quarter, which was a 4.1% growth. Margins will be impacted by a wage hike, visa costs. So that should be lower by 100 basis points to about 23.7%. Profits seen on the flatter side, so just up close to about 1.5%. Key will be what happens to their FY19 guidance. Their constant currency revenue guidance of 6 to 8% is likely to be maintained, but their dollar revenue guidance of 7 to 9% could be lowered on account of the dollar strength, which has resulted in cross-currency headwinds. The key to track will be on their margins. Their margin guidance was lowered last time. It was lowered by 100 basis points to 22 to 24%, but since then, the rupee has depreciated by 4 to 5%. So there is a case for the company to do better on the margin front. So therefore, will they look to revise it? Some other internals that we look closely, one will be the performance of the BFSI space. TCS performed well. The management commentary was optimistic, signaling a turnaround. If Infosys also delivers and speaks confidently about BFSI, then you get a sense this is an industry-wide pickup there. Leadership attrition, Infosys has lost senior level people in their healthcare as well as manufacturing heads in the quarter gone by. So that is a worrying point. Outlook on deal wins because it's picked up in the last quarter. In terms of valuations, Infi is still trading at a discount of nearly 30% forward multiple to TCS, and that's because of a divergence in growth. TCS is expected to grow at 10% in constant currency for FY19, while for Infi it's a 6 to 8% guidance. The company could deliver somewhere in the middle of that. So for the valuation discount to narrow vis-a-vis TCS, the company's growth needs to pick up and come closer to that of TCS. Back to you.
Oh yes, there will be those separate problems, of course, which one will look for in Infosys. But yes, if the management commentary and the BFSI index is good, BFSI vertical is good, then definitely IT stocks have a good thing going. And you can already see it in Wipro, actually. That's the one that's racing ahead with a 3% gain. Just a word on Karnataka Bank. There are a bunch of flashes coming your way. I just want to point out to one factor, perhaps, which is worrying the market, and that seems to be the net interest margins. That's down to 3% from 3.54 in the previous quarter. So clearly, the higher cost of funds seem to be hurting. We saw a little bit of the higher cost of funds coming into even mighty IndusInd Bank, but in Karnataka Bank, clearly it has had a negative impact on the margins, and it's possible that that's why the markets are reacting negatively to the Karnataka Bank conference call. Otherwise, in terms of slippages and net NPA, which the net NPA number which we already knew, there isn't really much to complain. The slippage breakup also is pretty much on expected lines, with agriculture, medium and small industries and exports taking an equal share each. Well, I think the MSME dispensation has been used and, maybe that's also something the market's worrying about. But I think other than margins, there isn't really too much of a worry on Karnataka Bank, but markets not at this point in time very enthused by what Karnataka Bank is saying. Abhishek is still listening to the conference call, and we should have Abhishek joining us with more details if he found any. For the moment, let's wind up our equities and go over to commodities. There are a lot of positive cues that we got from the commodity markets. Crude in particular, bearish for a commodity bull, but good for Indian equities. As well, of course, the metal stocks are doing reasonably well today. Let's see what Manisha has for us. Good morning, Manisha. I think we are calling you a few seconds. Okay, the clock's just struck 10. So tell us what the commodity markets are telling you.
Thank you for that, Lata. Well, yes, just waiting for the first trades to come in, but the crude oil prices have been on the weaker side for this week. We are down 5% for the week and a second weekly decline, really. 0.5% up, and this is really adjustment to the kind of gains that we saw in the crude prices overnight. Remember, we are back around that 78 mark for the Brent prices, and 70 has very strongly held for the US crude as well. There are some lines of caution or concern coming from the IEA, which says that there are a lot of oil supply concerns from Venezuela, Canada, Nigeria, Iran, etc. And even if Saudi Arabia and Russia do try to fill that gap in some way, that doesn't leave the world with much of spare capacity. So the world oil producers really are stretching themselves to capacity, and that really is adding some premium to the prices. But as I said, it hasn't been such a great week. We are down 5% for this week when it comes to the crude oil prices. It's a similar scenario when you look at the precious metal space as well. We haven't seen much of the money move in here. It is the strength in US dollar, the weak physical buying, and almost absent investment buying that we have seen in this sector that has continued to pull the prices down. So a third straight week of decline coming in for the gold and silver prices, very flat on your screens there. The base metal prices clearly seem to be taking cues from all over. Of course, it is the US and China trade war concerns which have been keeping many of these metals under pressure. Copper, for one, is headed for a fifth weekly decline. We have seen nearly 4% of cut come in for this week as well, and 16% down for copper prices in past 1 month itself. The only metal that is closing this week in positive is aluminum and nickel. Aluminum because China is looking to cut output to concern pollution, and nickel, of course, is trading at a 1-week highs, and that's because we have seen the Chinese steel prices at 10-month highs, and that, of course, has been supportive for those ingredients.
All right.